Now, it does seem that we're looking at the oil price through the lens of supply and these supply cuts being extended by Russia and the Saudis. But what about the demand side of the equation as well?
Well, demand is really good at the moment. That's one of the great things for the market is demand is probably exceeding some expectations. The cut by the Saudis and OPEC, and Russia, was expected. It was the duration that probably has taken the market off guard there. Yeah. It's extended through the year. Most people were looking through October, and you touched on this earlier in the show that the question of inflation comes back into the equation again. $90 Brent is a big number. Some options traders are betting on perhaps $100 soon. So those sorts of numbers start to filter through to the pump. It asks questions of central banks. Central banks have been raising interest rates. Are we in store for more hiking?
And so if we continue to see these cuts to the rest of the year, what does that mean? How much more upside risk is there to prices now?
I mean, the interesting thing about prices is overnight Brent rose 2.4%, right? You'd expect a cut through to the end of the year may have provoked a higher increase. So the interesting thing, I think, is that the market might be becoming accustomed to these cuts. What more can Saudi Arabia and Russia do to support the price? I mean, they are supporting the price. It is up around $90. It's the first time that it's been there since November. So what they're doing is working. But how much more do they have in the bank to inspire a higher price raise? But I think, 90, it's easy to think that we could be going to $100 towards the end of the year as the market tightens even further.